Good morning, students. Is my audio video clear? Hello. Is the audio video clear?
Yes.
Okay. So let us continue from where we stopped yesterday. We stopped with question number 10. So we can start with 11th question today. Okay, question number 11. Mayura Limited operates its plant on single shift basis. It can produce up to 8,000 units of output per month without overtime. So as of now, 8,000 units can be produced without overtime. Fixed cost on single shift basis of operation amounts to 30,000 per month. Average variable cost is 10 rupees. Output can be increased up to 15,000 units per month by working overtime. Output can be increased up to 15,000 units. This entails no increase in fixed cost. But the variable cost per unit during overtime, that is fixed cost, will not be there if there is a increase in the working time, that is overtime. Variable cost per unit during overtime will be 12 rupees in excess of 8,000 units up to the capacity of 15,000 units. However, if a second shift is worked, the maximum capacity of the second shift is 8,000 units per month. For second shift, maximum capacity is 8,000. But if you are working overtime, then maximum output that you can produce is 15,000. And there is no fixed cost, increase in fixed cost. But there will be a variable cost of 12 rupees in excess of 12,000. Now, if you're working a second shift, the maximum capacity of the second shift is 8,000. So 8,000 plus 8,000, total will be 16,000. The variable cost of the second shift is 10.5 per unit, and the incremental fixed cost is 6,000 per month. Required. If the company's demand for the product is 10,000 units, should the company work overtime or second shift? Second question. At what level of output will the company consider working second shift instead of working overtime? State the range of output for working overtime and second shift operations. So within what range we should be working overtime, within what range we should be having a second shift. During a particular month, the company has predicted its demand to be 14,000 units and worked a second shift. Demand is predicted to be 14,000 and it has worked second shift. At the end of the month, it was discovered that the company's demand was actually 11,000 units only. We predicted 14,000, but it came down to 11,000. And the company accordingly produced only 11,000 units. Calculate cost of prediction error. So you had estimated 14,000, actual units came down to 11,000. So what is the cost of that prediction error? Okay. So first let us work out the remaining parts. Let us start with the first part. First we have to find out here, should the company work overtime or second shift? So what is required is, company will be requiring second shift or work time depending upon what is the quantity demanded. And we'll have to compare the two options available with us, working overtime and working second shift. What we have to consider in this, we have to consider what will be the fixed cost and what will be the variable cost. Okay, so let us write down first. Overtime, second shift. Fixed cost, if we are working overtime, there is no additional fixed cost. If we are working second shift, do we have any fixed cost? What is the fixed cost for second shift?
1000.
6,000. Variable cost. If you are working overtime, it is 12 rupees in excess of 8,000 rupees, 8,000 units. And if it is second shift, it is 10.5. First, I'll calculate indifference point. Difference in fixed cost. Upon difference in variable cost per unit. Difference in fixed cost is 6,000. Difference in variable cost per unit is 1.5. So the indifference point is 4,000 units. Now, we have to understand, pay attention now, very important point. We have to understand that this indifference point is between working overtime and a second shift. It is between working overtime and second shift. So if I add the actual production, normal production, what is the indifference point? 8,000 plus 4,000. 8,000 as it is I'm producing in the normal shift, plus this 4,000. So my effective indifference point is 12,000 units. So write down, effectively, the indifference point will be 8,000 normal production plus this 4,000. So that is 12,000 units. Because we are not going to verify whether we are going to produce additional 4,000 or additional 3,000 or additional 2,000. We are going to talk about total production. For example, in the first part of the question, they have said if the company's demand is 10,000 units. They have not said if the company's demand is plus 2,000 units. So when we talk about demand, we talk about demand in general. So in general, the effective indifference point is 12,000 units. Between the two options, the indifference point is 4,000 units. Okay, so overall the indifference point is going to be effectively 12,000 units. Now, okay, so first part of the question I'm answering now. The question was, if the company's demand for the product is 10,000 units, should the company work overtime or should the company work second shift? 10,000 units is below the indifference point of 12,000. So now you see why I've taken 12,000, why I've not taken 4,000 only. Okay, so I say that 10,000 units is below the indifference point of 12,000. So if it is below the indifference point, what do? I select that particular option where the fixed cost is less. Lower the fixed cost, the better it is. If it is above the indifference point, I check for the PV ratio, whichever has got a higher PV ratio. If it is below the indifference point, I always go for lower of the fixed cost. So lower of the fixed cost, overtime has got no additional fixed cost, that is zero. So I would prefer, since actual demand is below the indifference point, I will go for the option of overtime. Okay, so write down. If the company's demand for the product demand for the product is 10,000 units, it is below the indifference point. Therefore, overtime option is preferred. Since it has lower fixed cost. Okay. Second question is, at what level of output will the company consider working second shift instead of working overtime? At what level of output will company consider working second shift? Okay, on instead of working overtime. State the range of the output for overtime working and second shift operations. Fine. If it is 10,000, we have said. If it is below 12,000, we have said that we are going to opt for overtime option because the fixed cost is less. At 12,000 units, we are indifferent. So you can say that from 0 to 12,000, from 0 to 12,000, or you can say 8,000 to 12,000, we will consider the overtime option. And at 12,000, we are indifferent to both the options. Above 12,000, I would prefer the second shift. Up to what level? What is the range? Up to 16,000. Because the maximum capacity is 16,000. 8 of the first shift, second shift 8,000. So 8 plus 8, 16,000. So about 12,000 up to 16,000 range I'm giving because they asked for the range. About 12,000 up to 16,000 maximum, I will go for second shift. Okay, so write down up to a demand of 12,000 units. the overtime option is preferred. The overtime option is preferred. At 12,000 units, company can select either overtime option, or second shift option. If demand is in excess of 12,000 units, up to 16,000 units, and bracket you write 8 plus 8. The second shift option should be considered. Okay. Now let us look at the third part of the question. What is the third part of the question? Third part of the question is, during a particular month, the company has predicted its demand to be 14,000 units, estimated, and it has worked the second shift. Why? Because we said now more than 12,000 it is second shift. So they have worked second shift, thinking that it is 14,000. But at the end of the month, it was discovered that company's demand was only 11,000. So if it is only 11,000, that means we should have gone for overtime. Because we have said no, less than 12,000 overtime option, up to 12,000 overtime option. So we should have gone for overtime option. So clearly the decision has gone wrong. Instead of going for overtime option, we have gone for second shift option. So now what is the cost of making this wrong decision? Prediction error. Cost of prediction error means cost of taking a wrong decision. Okay. So let us see how to calculate cost of prediction error. Cost of prediction error. Overtime and second shift. Fixed cost. Overtime, nothing is there. Second shift, it will be 6,000. Variable cost. Now I will calculate variable cost of only the prediction error. Prediction error means what? Of 3,000 units. That is error, no? Of 3,000 units. We have predicted 3,000 units wrongly. 14,000 we have predicted, actually is 11,000. 14 minus 11, 3,000. So variable cost of, you can write here additional 3,000. Okay, additional 3,000. Overtime, the cost is 12. 12 into 3,000 is 36,000. And for second shift, it is 10.5. 10.5 into 3,000 is 31,500. So now clearly prediction error is 1,500. 3,700 minus 36,000. You should have opted for overtime. You have opted for second shift. If you had opted for overtime, the cost would have been 36. Now it is 3,700. So how much more we are paying because of wrong decision? 1,500. So write down. Since the actual output is only 11,000, since the actual output is only 11,000 units, and not 14,000 units, the overtime option should have been considered. Where the cost of additional 3,000 units would have been 36,000 units. Now, actual cost is 37,500. Therefore, cost of prediction error is equal to 37,500 minus 36,000.
When calculating variable cost for 3,000 units, you said it's 14,000 minus 11,000.
14,000 minus 11,000. 3,000.
But we are not producing 14,000, right, sir? We are producing 11,000. So
No,
it should
we are
be
producing 14,000.
11,000. It should be 11,000 minus 8,000, right?
We have produced, actually, we have calculated for, we have incurred the expenses for 14,000. Though we have produced only 11,000. Variable cost has already been incurred.
Yes.
Variable cost, that is, we have purchased raw materials, etc. Okay. So variable cost means what? Direct material, direct labor. So already you have purchased the materials.
Variable cost that is incurred, right, sir? Variable cost that is incurred is only for 11,000 units.
No, it is not
So
only
it
for
should be
11,000 units.
for the
The
additional
company,
3,000.
no. Company has produced 11,000 units. You are still not getting the point. See, I have predicted 14,000. So will I not purchase materials for 14,000? I will employ labor for 14,000. I will pay them wages for 14,000. Now production has taken place only for 11,000 units. That is why I'm saying that there is a prediction error. So I will not be, it is not GIT system that I will only as the demand is there, I will produce. I have anticipated 14,000. So I have made necessary arrangements for 14,000. I have purchased material for 14,000. So cost is there, no? Purchase cost is there. I have purchased for 14,000. I have hired labor for producing 14,000 units. But production has taken place only to the extent of 11,000. So for the 3,000 units additional that I purchased raw materials, it is waste. And had I known that it would be only 11,000, I would have gone for overtime. But I have already started the second shift. Understand? I have started the second shift assuming that it is going to be 14,000. So I will not be producing 14,000 in one single slot now. I will be producing in one shift. I will be producing, that is in the second shift on one day. Second shift, I'll be producing 2,000 units. Second day, second shift, I'll be producing another 4,000 units. Third day, second shift, I'll be producing. So second shift is not only working on one day. It is working throughout the month, entire month. So when it is working throughout the entire month, then I have to pay wages for the workers. I have to purchase raw materials, anticipating it is 14,000. But then after production comes to 11,000, I find that, customer has stopped. Customer says that he is not going to take the remaining 11,000. So whatever expense I've already incurred on variable cost, on variable overheads, it cannot be recovered. So how much cannot be recovered? 1,500 cannot be recovered now. It is increase. It is more than what I would have incurred if it was overtime. Okay, so that is the cost of prediction error. Yes. Anything else? Okay, let us take question number 12 then. Question 12 onwards is we are having more of shutdown problems also. So let us see different types of questions on shutdown. Question 12. Selling price per unit of a product is 14 rupees. For the forthcoming period, demand will be only 5,000 units. The fixed expenses at 50% capacity, that is 5,000 units, will be 30,000 rupees. Company is thinking of shutting down the operations, in which case an additional amount of 2,000, it is an additional amount of rupees 2,000 will have to be incurred for shutting down, and only 20,000 of the above fixed cost can be avoided. What should be the variable cost per unit to recommend a shutdown? What should be the variable cost per unit to recommend a shutdown? Tell me. You know the formula of shutdown. You know the formula of indifference point. So tell me what should be the variable cost per unit for recommending a shutdown? For shutdown, I require what? Unavoidable fixed cost to be separated from avoidable fixed cost. Work it out and tell me. See if you can get the answer. Variable cost per unit.
If variable cost is 14.4 or more.
Variable cost is 14.4. No. Variable cost, if it is 14.4, it is more than the selling price also. Okay, let us see how to do. It involves both your concepts, indifference point and shutdown concept. Let us see how. We have to find out the variable cost per unit. So I'll start by let the variable cost per unit equal to X. Let the variable cost per unit equal to X. If the company continues its operations, if the company continues its operations,
Sir, 10.4.
yeah, the fixed cost incurred, the fixed cost incurred would be 30,000. Okay. At shutdown point, at shutdown point, what will be the fixed cost? Fixed cost equals to 20,000 is avoidable cost. So 30,000
10,000.
minus 20,000, but it will incur additional 2,000 fixed cost plus 2,000.
12,000.
So it is going to be 12,000. Shutdown point fixed cost will be 12,000. So what do we know? We know that if continued operations and shutdown, fixed cost, if continued operations, then it is going to be 30,000. At shutdown, it is going to be 12,000. Contribution per unit. Contribution per unit. What will happen? If continued operations, then contribution will be 14 minus X. Correct? Selling price 14 minus the variable cost X. And here the contribution will be 0 because I'm not going to sell anything. Shutdown. So indifference point at 5,000 units. Okay, indifference point. Sorry, not indifference point. Let us see. Let shutdown point be 5,000 units. And below that you write indifference at 5,000 units. Indifference at 5,000 units is difference in fixed cost. Difference in fixed cost divided by difference in contribution per unit is equal to 5,000. So difference in fixed cost is 30 minus 12, 18,000. Difference in contribution per unit, 14 minus X minus 0 is 14 minus X only. That is equal to 5,000. Cross multiply. 5,000 into 14 is 70,000 minus 5,000 X. So 18,000 is equal to 5,000 into 14 minus X. So 18,000 is equal to 70,000 minus 5,000 X. So 5,000 X is equal to 70 minus 18 is 52,000. So X is equal to 10.4. Therefore, variable cost per unit at shutdown equals to 10.4 per unit.
Sir, I didn't use indifference point.
What happened?
I did not use indifference point. I used marginal cost and statement.
Margin cost statement, what have you done?
First, I've calculated the cost that I will incur when I'm shutting down the business. That will be the loss at the end of the marginal cost statement. And the sales would be 70,000, which is 14 into 5,000 units.
Yes, yes.
And then I get the fixed cost as 30,000.
Yeah.
And the rest of it is balancing figure.
No, see,
I have the
70,000
loss.
minus 30,000 is 40,000 contribution. No, sorry, variable cost.
No, sir. I got sales and I got fixed cost. And I
Okay.
got loss. So from loss and fixed cost, I got contribution.
How did you get loss?
Loss is the maximum cost I'm incurring when I'm shutting down the business.
Maximum?
Cost incur.
No, you can't do that. How can you take that as a loss? If you're doing 70, if you're taking sales as 70,000, then how can you say that it is a loss?
No, I did not use the formula, sir. I used marginal cost and statement.
Yeah,
It's
that's
still
what
the
I'm
same
saying.
concept.
In the
It's
marginal
still the
costing
same
statement
concept, but
only, see, sales
yes,
minus variable cost we have taken, you'll get
yes,
contribution, minus a fixed cost, you'll get profit or loss. Okay.
yes,
So you have taken sales as 70,000.
yes,
You have got fixed cost as 30,000.
yes, sir.
Then what?
12,000 as loss.
How can you, that's what I'm asking you. How can you take 12,000 as loss when you are having sales as 70,000 here?
But
12,000 will be the cost that you are incurring. 12,000 will be your fixed cost incurred on shutdown. 12,000 is not your loss on the in case of operations. How can you take 12,000 as your loss on operations?
no, that is the maximum cost that I can incur when it comes to
No, you are, see, once you say that this is 70,000, that
yes,
means you are continuing operations, continued operations.
yes, sir.
So how can you take 12,000 as loss?
Because the
this
other
will be
option I have is
52,000. This is 52,000. As per 10.4, it is 52,000. So contribution will be 70 minus 52,000. That is 18,000. Then you will get this loss as 12,000. You cannot
yes.
straight away first write the loss, because you are taking
No,
loss from where? You are taking loss from the fixed cost of the shutdown operations. That is not the same as this.
no. If the total cost I'm incurring when I'm shutting down the business is 12,000, right?
If you are selling out the business, but you are talking about continued
Yeah, if I'm
operations.
shutting down the business, it's 12,000, right?
If you are selling off the business, then the fixed cost is 12,000.
Yes. Then the cost I'm incurring for shutting down the business is 12,000, right?
The cost you are incurring for?
Shutting down the business, closing the business.
Yes.
Then that should be in the other option. I shouldn't get less than that. I shouldn't incur less cost than that, or less loss than that.
No.
That's the concept of indifference point, right, sir?
Indifference point is that, yeah, indifference point at 5,000 I'm taking, that your sales and the profit or loss will be one and the same. The sales and the profit or loss will be one and the same. But in that case,
sales or profit or loss between two options is the same, right? Between two options.
Yeah, but
For the same number of units.
But the sales cannot be 70,000 here because you are not going to sell anything. No? That is why I've taken contribution as 0. I've taken contribution for shutdown as 0.
No, sir, not the contribution for shutdown. I'm doing it for the option, first option. It's when contribution is not 0. It's 14 minus X. When the contribution is 14 minus X, that is what the marginal cost statement is for.
Yeah. So that is when you're continuing operations.
Yes. That is only when only then that I'll get the sales, right? Because it's 14 into 5,000.
Okay,
14 is selling price.
Fine. But then you are doing the same thing as what I'm doing, but in a different manner.
Yeah, I'm doing the same thing without formula. I'm not using any formulas.
Fine. You can do it.
I just use balancing figure. The simple concept I use.
But I don't think you will be getting the necessary full marks for this because they want you to make use of indifference point and shutdown point more than marginal costing. I told you yesterday, I told you that we are concentrating more on the new concepts, application of margin costing. So we are not really concerned with the margin cost statement. We are concerned with the concepts. Make use of the concepts and then do it.
Even this uses concept, right? Because in both the cases, we are getting the same cost.
Yeah, answer is same. Answer is same. But what will happen is that you may not get the full marks for the solution. So if your marks are, say, 8 marks are given, I may give you 7 out of 8 or 6 out of 8. So answer is right. Many times you'll find the answer is right, but you are not getting the full marks because you have not solved the problem as per the requirement. Now, requirement here is to make use of indifference point. At final CME, you have to make use of the indifference point and shutdown point. That is more important than application of margin costing. All these problems we can solve by margin costing also. The same problems we can solve by margin costing method also, but we are not making use of margin costing here. Only the basic problems are touched with using margin costing, but more application of this will be in the case of indifference point and shutdown point. So wherever possible, we have to make use of these two concepts. Okay?
Okay.
Yeah. That is why I asked you the method of solving. Because method of solving, you may get an answer with a different method of solving also, but will that be applicable from examiner's point of view? That we have to see. So you will not get full marks, you will get maximum marks, but not the full marks. You may get something around 7 out of 8. So you may not get that 8 out of 8 because concept is not used. So at the CMA level, try to use the concepts wherever possible. If not possible, then we'll make use of the basic margin costing application. Let us come to question number 13. Question 13 says, G Limited produces and sells 95,000 units of X in a year at its 80% production capacity. 80% production capacity. The selling price of the product is 8 rupees per unit. Variable cost is 75% of selling price. Fixed cost is 3,50,000. Company is continuously incurring losses and management plans to shut down. The fixed cost is expected to be reduced to 1,30,000 from 3,50,000. Additional cost of plant shutdown is 15,000. Should the plant be shut down, what is the capacity level of production at shutdown? What is the formula for shutdown point? Formula for shutdown point. Avoidable cost divided by contribution per unit. Avoidable cost. upon contribution per unit. Avoidable cost is equal to total cost. Total cost is 3,50,000. Total fixed cost minus unavoidable cost. Unavoidable cost, I will be incurring 1,30,000 plus I will be incurring additional fixed cost of plant shutdown 15,000. So 3,50,000 minus 1,45,000 is 2,05,000. Contribution per unit. Eight minus 75%. That is 2 rupees per unit. So shutdown point will be avoidable fixed cost is 2,05,000 divided by 2 rupees per unit. So 1,02,500 units. Should the plant be shut down? How much is the company planning to produce and sell? 95,000. So we are producing less than the shutdown point also. What is right time we shut down? So since the company produces, and sells 95,000 units, produces and sells 95,000 units, which is below the shutdown point, It is advisable for the company to shut down. Acha, now 80% production capacity we are operating at, and that is 95,000 units. 80% is equal to 95,000 units. So 100% is equal to how much? 1,18,750. Okay. So now they have asked us to calculate what is the capacity level at shutdown point. Shutdown point is 1,02,500. So capacity level at shutdown point is equal to 1,02,500 divided by 1,18,750 into 100. 86.32%. So you will find that even if we are operating at 86.32%, it is like we are not getting any benefit. So it is better we shut down. We are saying that shut down at 86%. Sometimes the company's operations are such that until and unless we work more than 90% capacity of our production, sometimes we have to close down the business. Even though the production capacity may be very high and we are working at a very high capacity, it may not be sufficient for the company to cover its cost. So we say that At 86.32, we are having a shutdown point. Okay. Whereas for many other companies, 86.32 may be a very good operating capacity level. Okay. Now, next question, you are going to do it just now and tell me the answer for that. Question number 14. It's a very simple question. A paint manufacturing company manufactures 2 lakh medium-sized tons of spray lac paints annually when working at normal capacity. Its cost of manufacture per unit is 16.40, made up as follows. Direct material 7.80 per unit. Direct labor is given to you 2.10. Variable overheads 2.5. Fixed overheads 4 rupees per unit. Each tin of the product is sold for 21 rupees with variable selling expenses 0.60 per tin. During the next quarter, only 10,000 tins can be produced and sold. Management plans to shut down the plant, estimating that the fixed manufacturing cost can be reduced to 74,000 for the quarter. When the plant is operating, the fixed overheads are incurred at a uniform rate throughout the year. Additional cost of plant shutdown is estimated at 14,000. Express your opinion along with calculations as to whether the plant should be shut down during the quarter. Second, calculate the shutdown point for the quarter in units of product, that is number of tins. So calculate and tell me, what is your opinion? Whether the plant should be shut down or not? If yes, why? If no, why? And calculate the shutdown point. First, calculate the shutdown point and tell me. As you calculate, you can tell me the answers. You can put it in the chat box. Your shutdown point. avoidable fixed cost is 4 into 50,000 minus 74,000 plus 14,000. This will be 2 lakhs minus 88,000. So 1,12,000. Contribution per unit. Selling price is 21 rupees minus variable cost is direct materials plus direct labor plus variable overheads plus anything else. 7.8, 2.10.
Variable selling expenses.
Variable selling expenses
0.
0.6. So that will come to 7.8, 9.90,
8 rupees.
10.5, 8 rupees. So shutdown point is equal to 1,12,000 divided by 8. So 14,000 units. Now they are saying that company can sell only 10,000 tins in the next quarter. If company can sell only 10,000 tins in the next quarter, then it is better to shut down. Now express your opinion along with calculations they have said, whether a plant should be shut down. Okay, if the plant is not shut down, then what will happen? If company decides to continue by selling, by producing and selling ten thousand tins, then what will happen? Contribution is equal to per unit it is going to be 8 rupees. So 8 into 10,000 is 80,000 minus the fixed cost. That is if it is not shut down. If it is not shut down, the fixed cost will be 2 lakhs. So there will be a loss of 1,20,000. If the company shuts down, if the company shuts down, the loss in bracket you write fixed cost is reduced to 88,000 from rupees 1,20,000. So that is the reason why we want to shut down, because if the company continues, the loss would be 1,20,000. If the company shuts down, maximum fixed cost that we are going to incur is 88,000. 74,000 unavoidable fixed cost and 14,000 additional shutdown cost. Okay. Any difficulty? Any questions? Let us take question number 15. If M Limited, if M Limited operates its plant at normal capacity, it produces 2 lakh units from the plant to make doodh. The unit cost of manufacturing at normal capacity is as follows. Direct material 65, direct labor 30, variable overheads 33, fixed overheads 7. Direct labor cost represents compensation to highly skilled workers who are permanent employees of the company. Company cannot afford to lose them, and 1 labor hour is required to complete 1 unit of the product. Very important statement. This statement is important. Labor cost represents compensation to highly skilled workers. Company cannot afford to lose the workers, which means that when we are solving the problem, when we are producing additional units or less number of units or whatever it is, we cannot afford to ignore these highly skilled workers. So they will be paid. They will be paid and they will be sustained. So what is the meaning of this? The meaning of this is that it is as good as a fixed cost. It is as good as a fixed cost. Therefore, this will be, that is the labor cost will be an irrelevant cost for them. because that has to be incurred. We have to keep them engaged. Okay. Company sells its product for 200 rupees per unit with variable selling expenses of 16 per unit. Variable selling expenses. Company estimates that due to economic downturn, it will not be able to operate the plant at normal capacity, at least during the next year. It is evaluating the feasibility of shutting down the plant temporarily for 1 year. So what is the new adjustment here? We are not permanently shutting down the plant. We are not talking about shutting down the plant forever. We are talking about temporarily shutting down the plant. If it shuts down the plant, the fixed manufacturing overheads will be reduced to 1,25,000. Reduced to 1,25,000. Overhead costs are incurred at a uniform rate throughout the year. It is also estimated that additional cost of shutting down will be 50,000 and the cost of reopening will be 1 lakh. So when we consider the shutdown cost, normally we used to consider only shutdown cost because we are going to shut down permanently. But here, when we are considering shutdown cost, we will have to consider the reopening cost also because it's a temporary shutdown. And if I decide to shut down, I have to incur both the cost, shutdown cost as well as reopening cost. Okay, so labor cost is irrelevant cost. Shutdown cost is going to include shutdown cost plus reopening cost because it's a temporary shutdown. Required. Calculate the minimum level of production at which it will be economically beneficial to continue to operate the plant next year. If 50% of the labor hours can be utilized in another activity, 50% of the labor hours can be utilized in another activity, which is expected to contribute at the rate of 40 rupees per labor hour. So that means I am going to get, even if I shut down, my labor, I told you the labor cost is irrelevant. Okay, labor cost is irrelevant. So I'm not going to consider the labor cost, but 50% of the labor hours will be employed in another job, which will give me a contribution of 40 rupees per labor hour. So that is a benefit for me. That will be a benefit for me. So I will have to consider that. The additional activity which will relate to a job which will be offloaded by a sister company only if the company decides to shut down the plant. Assume that the cost structure will remain unchanged next year. Ignore income tax and time value of money. Okay. So let us write down. First, what we'll write down? We'll write down this point about labor cost. Labor cost being irrelevant cost. Write down. In the problem, it is clearly mentioned. It is clearly mentioned that labor force represents skilled labor who are permanent employees and company cannot afford to lose them. Company cannot afford to lose them. Therefore, labor cost is an irrelevant cost. labor cost is an irrelevant cost. It will not be considered. It will not be considered for decision making. It will not be considered for decision making. So selling price is given to be per unit. Selling price per unit is 200 rupees minus variable cost per unit. Now this variable cost will show direct materials 65 rupees. Labor will not be taken. Variable overheads 33 rupees. Selling expenses, variable selling expenses 16 rupees. 98, 108, 114. Contribution 86 rupees. Okay, so you can write here labor cost is not considered. Labor cost is not considered. Now, if the plant is shut down, what will happen? If plant is shut down, savings in labor cost. Now, if you go to see, I'm producing 2 lakh units and the fixed overheads are 7 rupees per unit. So 14 lakhs will be incurred. Now, if the plant is shut down, the fixed manufacturing overheads, will be reduced to 1,25,000. So savings in fixed cost. Savings in fixed cost. 7 twos are 14 lakhs. This will be reduced to 1,25,000. So 12,75,000 will be my savings. Plus 50% of my labor hours are going to earn me contribution of 40 rupees per labor hour. So additional contribution from job of sister concern two lakh hours. 50% of that I'm going to use. Contribution is 40 rupees per hour. So 40 lakhs will come. Additional contribution. Shutdown and reopening cost. shutdown and reopening cost. $1,50,000. 62 minus 1, 61,25,000. Sorry, 51,25,000. Okay, if this amount is to be recovered, so they have said that calculate the minimum level of production at which it will be economically beneficial to continue to operate. So if this amount is to be recovered through sales, to recover this amount, through sales, the quantity required to be sold, the quantity required to be sold is equal to 51,25,000 divided by contribution per unit. Contribution per unit is 86 rupees. Contribution is 86 rupees. Approximately 59,593 units. 59,593 units. So in any problem, they have given that it is temporarily shut down. Always look out for shutdown cost and reopening cost, because both that will be a part of shutdown cost. So if you want to continue, then you have to sell 59,593 units so that you can continue and earn that amount of 51,25,000 as your revenue. Instead of shutting down, you can continue the business provided you can produce and sell 59,593 units. So minimum level of production at which it will be economically beneficial to continue. Okay, so write down. Therefore, minimum 59,593 units should be produced and sold. Should be produced and sold. If company does not want to shut down. If company does not want to shut down. Let us come to question 17. Question 17. A process industry manufactures 3 joint products A, B, and C, where C has no realizable value unless it undergoes further processing after the point of separation. Okay. The cost details of C are given to you per unit. Up to the point of separation, 30 rupees per unit. Fixed cost is 20. After the point of separation, 15 rupees per unit. Fixed cost is 5. C can be sold at 37 rupees per unit and no more. That means maximum selling price is 37. Would you recommend production of C? First. Second, would your recommendation be different if A, B, and C are not joint products? So what will you say? If C is a joint product, first of all, if C is a joint product, then what will happen? Then whatever cost is incurred up till the point of separation, it is of no use to us. It is irrelevant. Only what is incurred after separation, that will be considered as additional processing cost. So in that case, if C is a joint product, since C is a joint product, and it can be sold at a maximum of 37 rupees, what is my relevant cost here is only additional processing cost after point of separation. That also variable cost, that is only 15 rupees. So 37 minus 15, I will get a contribution of 22 rupees. So since additional processing of commodity C gives me a contribution of 22 rupees, it is recommended to produce C. That is the answer to the first part. Okay, second part. Would your recommendation be different if A, B, and C are not joint products? Answer is yes. It would be different. The reason being, if they are not joint products and they are separate products, then I will consider this variable cost of 30 rupees also. So, and this 30 will be added to this 15. So selling price would be 37 minus 30 plus 15, 45. So 37 minus 45, there would be a loss of 8 rupees per unit. Okay. Since the contribution is negative in the second case, production of C would not be recommended. Okay. So this is the answer for question number 70. So solve the answer at home, and we will see in the evening lecture how to continue with the remaining questions. Okay. So solve this question. First part you write, if A, B, and C are joint products, then the cost that is incurred up to the point of separation, that is joint cost, is an irrelevant cost. First write that statement. Okay. So only the cost incurred after separation is relevant cost. In that case, you write down selling price 37 minus the variable cost in bracket relevant 15 rupees. Contribution 22 rupees. Since product C results in a contribution of 22 rupees, it is advisable, it is recommended to produce C. That is the answer to the first part. Answer to the second part, if A, B, and C are not joint products and C is produced independently, then the relevant cost would be 30 plus 15, 45 rupees. Selling price 37 minus the relevant cost 45, net loss of 8 rupees. Since the contribution is negative, it is recommended not to produce product C if it is not a joint product. Okay, so can you do this at home? You can easily write the answers, write the points. Fine. We'll stop here for today. Evening 6:30, lecture will continue. Thank you. Have a nice day.
Thanks.